ask the cool questions. But this morning on my way here, while I was coming to AfricaCom, I was thinking about the growth in transacting through digital technology. And the first thing I did, I used my credit card this morning at the petrol station to do a tap and pay payment. Oh, well, there's one. And then I've been given an active reward if anybody's South African here, and they cheat on their Discovery Health profile, and they get a free smoothie or a free coffee that gets sent to your phone, and you can redeem it in store. There's another one. And then downstairs I had a meeting, and we used Zapper, which is a payment app, to close out the transaction. And I thought, there's a normal day, and I've used digital to transact in multiple ways for multiple things, all part of my life in a way. And so this afternoon we get the ability to ask a couple of questions of some people in the game. Really want to say thank you very, very much, gentlemen, for joining us today.
What is commerce initially, yeah, and then what is m-commerce, what the mobile as a channel bring to the equation. So first of all, every transaction, a financial transaction, involves 4 different elements. One is the matching, where you have a buyer and a seller interacting with each other. Yeah? In the old good days of cash, it was the transaction was exchanging goods versus cash over the counter. Yeah? Then the second dimension is the reconciliation. Yeah? So you need to move the money from one place to the other. In the case of a digital transaction, being it a card payment or being it a mobile transaction, you need to move from a source of funds to a destination, the funds. You have a third dimension, which is an actual confirmation of that transaction, both for the payer and the payee, to know that the transaction is completely, so you can release the goods. And then you have a fourth dimension, which is the actual receipt. Yeah? So you need to have a written or digital confirmation with the details of the transaction. What exactly is the M addition to the commerce? Yeah? Is it that the transaction is initiated from a mobile device, being it a mobile phone or a portable device, a mobile device? Or is it that the transaction is accepted on a mobile device, being it an MPOS or whatever name it will carry? Or is it that the transaction gets intercepted and analyzed for the sake of rewards or for the sake of loyalty in a mobile environment? Or is it that the receipt confirmation and the transfer of funds is happening in a mobile environment? Read the mobile money accounts or other similar things. So I think in my own take, the M addition to the commerce is a simplification of complication of the whole ecosystem in the same time, with a lot of opportunities, because if you look at the traditional transactions, leaving the cash aside, the digital transaction that have been around the card transaction for 70 years, there has not been much innovation in that space until 5-10 years ago. Yeah? So the opportunity is huge. The M is adding a little bit in all these spaces of the transaction, I guess. Yeah.
There is not a huge difference to us, especially in Africa, between e-commerce and m-commerce from day one on, and that was a bit different. We are the youngest online payment service provider in South Africa, for example. All of our competition has been around longer and was quite established when we started, but one of our differentiation was that from day one on, we wanted to get the mobile experience right. The banks didn't want to hear that. They didn't think that was really relevant at the time. Now it's a different story. So we do see the M in commerce as a mobile commerce from our perspective, mainly that the shopper or the customer wants to finalize the checkout and also the payment transaction from a mobile device.
Yeah, I think so the M clearly refers to mobile. I think we all sitting here and we know what it has and the impact it has in Africa in particular. But for me, mobile is just the technology or the hardware. It's the enabler. What mobile does is allow, from a shopper's perspective, the thing is personalization. So what it allows now is you've got access to this enabler, this tool, whenever you want it, wherever you are. And it allows you to personalize an experience when it comes to transacting through the line. And as I mentioned, the gentleman next to me are mainly focusing on the transaction payment element. But and if you look at that and you go into iStores now, traditionally you had to now go and pay, you had to give your card at a till point, and now we're moving to a more decentralized kind of shopping experience where you can purchase or pay at any point in your shopping time. Certain test stores in the US are working where you can just grab the item off your shelf, pay through your phone, you don't have to go to the till point. So it's personalized for you and when you want it to. It works in terms of if you've ever stood at a Walgreens or a Walmart and tried to choose the right skincare product for yourself, you've got personalization that I'm different as it is to Johan, is all the way through. So now, I used to have to wait for a beauty advisor to go and speak to the person. Now I have access to this information. So for me, M means the enabler. It's the hardware. It's then using it to personalize it for a shopper's experience through a plethora of tools, whether it be a payments provider, whether it be guys doing awesome stuff. A well-known app in the US is ModiFace. You can put a whole suit of makeup on your face without actually having even try the makeup, click, and off it goes to Sephora and makes a purchase. So it becomes down to your needs at the time of purchase. And I think that's what's exciting about mobile. It's about having the access to the information when you want it, because commerce means transacting, buying and selling, and it's when and how you want to buy and sell. You could be sitting in your PC, you could be sitting in a shop, you could be on the rugby field or sport field, and that's the turn that you go, oh, like those new shoes or skis that the guy's wearing, I'm going to look to make the purchase. And that's the enabler, which is very exciting.
I see it as mobile as anywhere. It's basically giving people the ability to transact and to act as merchants as well as customers from anywhere at any time. It's not really, I don't see it as device specific, although most transactions are happening from a mobile phone or mobile device of sorts. But I think it's the ability of giving people the ability to make a payment or a purchase from anywhere at any time.
And I think what we're saying is that all through these tokens of transacting, we're giving consumers access to engage and interact. And we're trying to make sure that we are as close to the customer in the transactional process and meeting the needs, the demands, and actually using the insights we've gained on the consumer to effect a larger basket size and a more repeated purchase. In each of your sectors and each of the environments that you're playing in, what do you feel are some of the trends that you're seeing come up as the growth of transactions and the growth of mobile devices in transactions is on the increase? What are some of the trends that you're seeing come through in some of the areas?
I think, the buzzword in South Africa and a couple of the other African countries is obviously around mobile wallets and the creation of mobile wallets and an ecosystem around wallets. There's an interesting image of Craigslist. I don't know if any of you know it. Craigslist in the USA started out as basically a classified site, very, very crude in its design, but one of the highest views. I think it got up to 9 billion. I think it was weekly page views that it was churning through. It started by a guy just was doing it from the backyard or this back shed. But needless to say, it had netting, it had dating, it had lifts or car rides, card sharing. And what's happening in that ecosystem of Craigslist is that you had specialty services coming and picking off. You've had Tinder on the dating, you've had Airbnb on the netting, you've had Uber on the drive or Lyft share. So what you're finding, I'm seeing is on the mobile, is that there's been this shift to transactions and payments, and everyone going, oh, create mobile wallets. And everyone's trying to have their own mobile wallets, whether it's the telcos, the banks, and everyone wants transacting through a mobile. But in its entirety, what I'm seeing now is that you're starting to see specialty and niche services, focused services coming off the back of that. That's driving behavior where people are needing those specialized services. I didn't need to see the dating because I was married at the time, so I didn't need that service. But Tinder's offering a better specialized service, and a wallet in an environment, that plugin or availability is an option for me to choose in my own personalized wallet in terms of what I'm offering and seeing. And then with specialization, you're getting better quality services because you're getting guys who are eating, sleeping, breathing that specific customer experience day in, day out. And I think that for me, that's the interesting part because it's been a little bit of a broad, unknown, transacting kind of wallets, money movements, stemming from peer-to-peer payments primarily in the Africa space to this specialized service, which is then becoming about a personalization and more customized service at the end of the day.
One thing that everybody, I think, in the room agrees is that mobile payments and m-commerce, whatever that means, is very different from market to market. Yeah? It's, if you look at African alone, yeah, it's very different in South Africa compared to the rest of Africa. So if you look at the specific of the payments markets in South Africa, we have a penetration of cards of probably about 35%, I guess, yeah. And in all the rest of Africa, have below 5% penetration of cards, yeah. You have a mobile wallets, electronic wallets offered by telcos in Kenya, which has a penetration of probably 80%, yeah. So there is about 17 million adults using a mobile wallet for payments, which is 2/3 of the adult population. Nevertheless, if you look at that market, it's about 30% of the cases are used for peer-to-peer, while 25% of the cases it's for a bill payment. Yeah. So does that define a mobile payment? Well, a mobile transaction, yes, it does, and still it doesn't. Yeah, because if you look at the most popular product for that specific service provider, which is a telco, and the core of their business, which is the airtime recharge, that is still purchased 50% of the cases in cash. Yeah? Mm-hmm. So you look at different markets that are carrying different characteristics, depending on a couple of things. One is the penetration of established, I would call them, means of digital payments, i.e. cards. You look at the infrastructure, which is primarily a retail infrastructure. If it's a massive retail infrastructure like you would have in South Africa, as an example, or in Western Europe or in the US, versus a non-well-established IT infrastructure for the retail, and you look at the penetration of smartphone as mobile device versus basic phones, yeah. Coming back to the means of interacting by USSD, that needs to be something which has to be applicable in the markets where the penetration of smartphones is low. Yeah? So we have been exposed, I would say, fortunately and unfortunately at the same time as a company, to different specifics and characteristics until we understood that you cannot build a solution that is globally applicable. Yeah? What would be applicable in a market like Sweden, where we are, let's say, originate as a company, where the digitalization of the payments is in the highs of 90%, yeah? And cash is basically not accepted in some places, to a society like some markets in Africa, where it's exactly the reverse, yeah, the opposite. You need to create a model, yeah, an ecosystem that is applicable for that market. Yeah? It was in my early engagements talking with retailers in Europe about the excitement around mobile payments. It was one large retailer in Europe who said, so you believe that just because somebody's going to wave with a mobile at the cash register, going to sell more? No, that's not the point. Yeah, the point is that you create some convenience and you start learning who that guy who pays in your shop is, because right now you know exactly what he's buying as a retailer, but you don't know who he is unless he's using a loyalty card. While the card company knows exactly who that guy is, but they don't know exactly what he's buying. Yeah?
That's something that's picking up in Africa as well. Card companies or the mobile money companies wants to know what you buy, what you're spending your money on. For better analytics.
Oh, yeah, I just wanted to get to when this whole convergence between mobile and banking started. There was really a scramble where the banks wanted to be mobile operators, the mobile operators wanted to be banks. Do you see it settling down where these entities are finding the space within the ecosystem? Because hearing you speak is almost like there is room for everything, but you need to specialize in what you're good at, rather than a bank trying to be a telco, vice versa.
Well, we will find different scenarios country by country, and I guess the regulator has a very important say in that. I would think that in Kenya, SafaricCom is more or less a bank by now. The banks and the regulators can do what they want. It's going to be SafaricCom having the most power as a financial institution. In Nigeria, there would have been the very same need. It's just the regulator. They've slowed down a development that one could have seen in Kenya before, and they've forced the mobile operators and the banks to work together on the mobile wallet concept, issuing licenses, slowing down the process, with the effect that mobile wallets in Kenya are by as they are in most of the other African markets, especially in Kenya. A universal answer to your question, I'm not able to give. I would think it's a country-by-country differentiation that's necessary.
If you look at South Africa, for example, you've got a medical aid company who wants to become a bank. And you've got the latest buzzword is the digital banks. I mean, if you look at all the startups or work, especially in Europe, there's a ton of them starting up. Everybody wants to become a digital bank. So I don't think it's ever going to die down or slow down. But yeah, it's my point of view. It'll only work if people work together. If everybody wants to do their own thing, it's never going to happen. That's why interoperability is a buzzword these days. The telcos in Africa realize that they need to work together and make seamless payments. If he's on end-to-end, I'm Airtel, and he's on Vodacom, we should be able to pay each other seamlessly.
Well, I agree fully with the fact that it's very specific market to market. So in Europe, there is no bank that has an ambition to be a telco, and they will not ever have a chance to do that. However, there are telcos that have an ambition to be banks. Yeah. So there is an initiative talking about interoperability, or there has been an initiative in Sweden where all the operators together created a company with a joint mobile wallet. Big failure, because there was no need they were addressing. There were no value they were creating. So somebody was saying that in order to hit hard on the market with something new, you need to be either twice as good or half as expensive as the established alternatives. Yeah. Well, when you have a penetration in that specific market, giving as an example in Sweden, of credit or cards, electronic or digital transaction of 95% plus, and a bank population of literally in an adult segment 100%, then to come with a mobile wallet is a proposition that doesn't serve any purpose at all. Yeah? And it showed, the market showed that was a failure in spite of the interoperability. Yeah? However, if you are looking at the African example, leaving South Africa outside of that, both Vodafone and Vodafone/Vodacom and MTN are competing in statements who is the largest bank of Africa already, counting in number of accounts or wallets. Well, do they have a chance to achieve that ambition? I truly believe yes, because there is a need in the market, there is a highly unbanked population that is probably easier served by the entity that has a closer relationship with those customers, and that is the telco rather than the bank. Now, the regulatory frame is protecting, and in some markets a little bit unfairly, like in Nigeria, the banking or the financial segment on an expense of the telco segment, and that doesn't serve the actual benefit of the market. So in some markets, the telcos will have a big say into the financial services and the future of the financial services. In some others, the banking segment will have something to bring to the innovation and to the mobilization of the financial service. There is another example of players or a vertical industry that had ambitions or has ambitions to penetrate or to enter the payments, and that is the retail as such. If you look at the US, which is a strong retail and established market, there was a association, let's call it, of retailers with Walmart driving that had an ambition and a common company initially called Cell C or something like that, and then unfortunately called ISIS, and then they need to scrap all the project because of some similarities that had a single purpose, to create a payment network and a payment method with digital wallets branded by each merchant that has nothing to do with the banking or the financial or the telco industry and such. A completely third initiative. Supporting again the earlier idea that everybody sees a value in the payment because it's the final step in completing a financial transaction. And you need to make a deal, you close it with a payment. But depending on who's the strongest in the ecosystem, if it's the telco or the financial institution, due to regulation or penetration or legacy and history, or the retail industry, like the example in the US, that probably will have a say in that space. and all have the same interest. Yeah.
You even have in this market, you've got the property companies getting into it. So the guys who own the shopping centres. So they're looking now to create payment solutions to be centralized across all the merchants that are within their ecosystem. So it doesn't just extend, I agree with you 100% to telcos. It's everyone's looking to get their piece of the pie. That's what, to me, is the fascinating one. Is that everyone's looking at this payment element and going, I want to share of that. I don't need to be a bank to have it and be so governed depending on the regulatory. So there's multiple touch points that the guys are entering into, and that's an interesting one. For me, it comes down to focus, I think.
Correct, and the size of that pie, the payment pie, is huge. It's gigantic. The margin of that pie are very small. Yeah. That's a game of volumes and small margin, but the value doesn't come from being part of that. It's to create additional value of the transaction data. Yeah? If you call that rewards, or if you call that additional information in the process of the transaction or decision-making process for buying something, that's where the value comes from. The payment will always be there because that's, in any kind of transaction, that's the ultimate step in closing a deal. Yeah? But the value comes from the additional data that was unexploited enough, and the mobile gives the mean of trying to exploit that better.
I don't think the issue is with the trust. I think that's the wrong word. I think it needs to go back to need creation again, because trust comes about from wanting a service, and then from wanting a service, using the service, and then from using the service becomes frequency of use and building trust in it. So yes, you have trust with well-established brands and big companies who've been going X years and have brand equity that's been built behind them. But primarily, it's about finding the need to solve the solution. We had a little chat beforehand, and we were saying, it's interesting how some payment providers, in terms of the use of the solution, it's a nice to have, it's not a must have. So I think the key in each of the markets, and I agree with these gentlemen in saying that every market is different and every market has different needs, and whether that be the way that the technology is engaging through, whether it be USSD or app, or whether it be the problems, but it's finding that problem that will then create the need and the must for the consumer, both the merchant and the shopper or the consumer at the end of the day, to use the solution. And that will create frequency and habitual use. And it stems back from peer-to-peer payments. There was a must-have of getting your money across to peers across the board, or who were located far away. And that's the question to solve. And that also stems to your question around specialization that you had as well. What is the specialty? There's many must-haves. There's different segmentations of different people within a market who have different needs and must-haves. And it's about finding those, and I think that will build trust and credibility in the sector. So I don't think it's about pumping money for trust, it's about building needs.
Trust company.
Well, there might be an urgent need that makes you do something and overcome the trust issue. If it's mainly convenience that is being argued why you should use something new and that you don't trust yet, it might not be convincing enough. But what I've experienced then in the South African e-commerce market, that greed was a very good motivation to also create trust. So the coupon type of daily deal companies made a big difference in the online market in South Africa. Everyone wanted to have this 70% off deal. That cool device that I've been trying to get all the time, and it's so cheap now, I'll get that. Whether I'll ever use it, I don't know, but I wanted it, or I wanted to get that spa deal for my wife. All of a sudden, whether there was enough trust in online card payments or not, people were trying it, and once nothing happens that is bad and is giving them a bad experience, then by doing it, they gain trust.